Yo, 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 what is the dealio, y'all? Listen, man, we got a straight banger for you today, all right? Every single day we coming to you, giving you life-changing information on how to trade, how to manage your money, inspiration, life advice, all of that stuff, all right? Today is no different. Today in this video, I want to talk about how to trade gaps and then also how to trade consolidation, all right? So I'm gonna go over all of that, right? If you're just watching this, if you're tuning in, be sure to like this video for me and subscribe to this channel, all right? Now, before we get started on how to trade gaps and how to go into consolidation, because I don't like wasting y'all time, what I do want to say is I gotta shout somebody out, man. Listen, check this out. I want to shout out Q Tisha. Look at this. She left one contract running. She swung it overnight. She made 757% on her money. All right. She finished out at $1,500 profit, man. Give Q Tisha a round of applause. Tell her congrats in the comments. All right. This is her biggest trade yet. This is her first $1,000 day. All right. Her first $1,000 day. So I just had to shout that out, man. Shout out to you, Q Tisha. You've been doing the work. You patient and you getting better every single day. All right. So with that being said, I want to talk about gaps, how to trade gaps and consolidation. All right. Now, you have gaps. You got gap ups and gap downs. There's a lot more gaps, and I'm going to do a different video about gaps by themselves, but I'm talking about gaps because today the market gapped down, right? So I'm talking about the whole market. The whole market gapped down today, which means that if you don't know, the stocks closed at one price, and this morning they opened at a much lower price. All right, that's what a gap down is. Now, because stocks gap down, you got three things that's going to happen. They're going to keep going lower, they're going to come back up and balance themselves out, or they're going to go sideways. That's all a stock can ever do. A stock can only go up, down, or sideways. That's all it's going to do, all right? Sideways is known as consolidation, when it just goes up and down, and no real moves are made, okay? And we're going to talk about consolidation in a minute. But I want to talk about trading gaps. So when you see that a stock has gapped down, right? In this case, down. This is down or up. But in our case, we're talking about down. When you see a stock has gapped down, right? Number one, you're going to have to know patience, because the stock gap down, we don't know what's going to happen yet. Is our stocks going to keep going down? Are they going to balance out and just flatline? Or are they going to go back to the upside and fill the gap? All right. Now, a rookie trader is either going to do one or two things, depending on what type of trader they are. A rookie trader, when the market opens, they're going to immediately get into a put when we see that the stock market gap down. I used to do this, right? Or another type of rookie trader is going to get in a call and think that the stock is going to fill the gap up. I'm going to show you what Wall Street did to trick people this morning. Okay? Now, what usually happens is the stock does what it wants to, and we don't know until we know. Okay? And that's why you got to know what your levels are, your support and resistance levels, so that you could trade efficiently. Right? So, we're going to go to the charts, and I'm going to show you some things. But before we go to the charts, when we're talking about consolidation, I want to tell you this. The best way to trade consolidation is to not. All right? Listen to what I'm telling you. Don't trade consolidation. You will lose more money than you make. I know it looked like stocks going up. It's going to fake you out. I know it looked like they're going down. It's going to fake you out. Do not trade unless the stock has broken a resistance level or a support level. Listen to what I'm telling you. This will save you a lot of heartache and a lot of lost money. All right? So now let's go into the charts, and I'm going to show you what I'm talking about so we could bring all this together and you can understand what I'm saying. All right? Here we go. Now, let's go to number one. Let's go look at SPY. S&P 500, right? This is the 15-minute. Now, yesterday, The S&P closed up here at 568, okay? So what we're going to do is we're going to say closing price right here, okay? Closing price. Now follow along with what I'm saying. 568.88, okay? So we're just going to say 568, all right? Now, the stock opened down here, okay, at 545. So we're going to, Friday, so we're going to make this right here, opening price. All right, and it's what, 545. All right, boom. Now, so here's what this means. This is now the range. So this is a $20 range, okay? But we got a smaller range right here. Pay attention to what I'm telling you. This is $1 million worth of information right here. So we're going to go from here. All right? We got this right here. We're going to make this a little thicker so you can see it. And then we got this right here. Okay? Now, or really, we could say this right here. All right? Now, we got, this is pre-market lows, and this is pre-market highs. Okay? So PM high right here. And then we got pre-market low. Boom. All right. Now, anything inside of this right here, I would not trade. Right? Because as you can see, it's going to come up. This is a resistance level right here as well. But anything inside of this range, I'm not going to trade. So as you can see, the stock just kind of chopped around all day. There's no clear direction. It's a fake out right here. Look like it's going down, right? Broke below this level. Look like it's going down. Boom, it shot right back up. Right? Let's look at another stock. Well, let's look at the opposite. This is Costco, right? Look at this range. We got a range right here. Boom. Right? And then boom, right here, okay? If Costco was trading inside of this range, I would not trade it, right? But you see it broke out of the range, and look at where it went from. It went from 932 to 967, and now it's at 977, right? But what did this stock do? This stock filled the gap that it gapped down from. Not every stock did that. This is one of the very few stocks that did that. Carvana, right? It came up. So let's look at this range. This is right here. Okay. And then it's pre-market highs and pre-market lows, right? And then right here. Boom. All right. So if Carvana was inside of this range, you wouldn't want to trade it. But because it broke below this range, look what happened. It came down some more. So if it broke below here, then you could get in puts because it broke below to the downside, which is an indication that it's going to keep coming lower, right? But a lot of people like to trade within a range and wonder why they're not making any money. So for example, look at Apple. Apple's range today was here and here, okay? Now, look what happened. It faked some people out, boom, and the rest of the day, it's just been consolidating. So if Apple doesn't convincingly break below this range right here, right? If there's not a continuation after this candle, then it's going to come back and it's going to try to come up here. If it can't come up here, then it's going to consolidate all day, right? Let's look at BA. Boeing did this right here, and then it did this right here. Boom. All right. Now it came down, so it opened up and it broke out. Boom. All right. So you could have wrote this down. That's cool, right? So it went from 157 to 153. That's a nice move right there. Okay. Don't trade inside of this range. Wait for the breakout. Okay. Look at DoorDash. This was the range. So the range was from here to here, right? As you can see, it opened up here and it came up here, faked people out. This candle lets you know that it's not going to keep going up strongly, and then it rejects and it comes back down, and now it's inside of the range. So for the rest of the day, I would not trade DoorDash, right? Look at Reddit. Reddit did something very similar. I got into Reddit today, made a couple dollars, but you got here and you got here, okay? Now, broke below, right? You could trade this range, right? You could trade this because it broke out of the range. When you see a stock inside of the range from pre-market highs to pre-market lows, do not trade inside of the range. This is how you get cooked, okay? This is how you don't win. I want you to win, right? I want to help you win, right? Look at Alibaba. This was the range today, very small range, okay? Very small range, all right? But it broke out, so you could have gotten a call right here, broke out, and then right here got out, right? That's a $2 move. That's beautiful right there, right? It went to go fill that gap. This stock filled the gap. Costco filled the gap, but a lot of other stocks did not fill the gap, right? Look at Palantir. Palantir did not fill the gap, right? Let's look at Palantir's range. So you got here to here for pre-market highs and pre-market lows. So anything inside of this, you do not enter in to calls or puts. You wait for it to break outside of the range and then you ride it up. All right? That's how you make stress-free money in the stock market. All right? That is how you make stress-free money in the stock market. A lot of times it's easy to get caught up in all of this stuff. VWAP this, EMA this, blah, 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 blah. Right? And that's great to know and understand. But if we understand that, okay, a strong move to the upside or to the downside only comes when it breaks above resistance or below support. It's really that simple. And then if it breaks out of resistance, then it's only going to go so far until it comes back down. And this is how you can make stress-free money trading options. All right? So that's how you want to understand gaps. Understand that it's all a game, okay? I'm going to be going live tonight, and I'm going to be talking about a lot more stuff in depth. So be sure to be on my live tonight. But I want you guys to understand, wait for the stock to prove itself, okay? Don't predict it. Don't think that it's going down. Don't think that it's going up. Wait for it to break above or below whatever level that you have charted out. And then from there, take your entry. Everything inside, it's just going to play with you. I'm not saying you can't make money inside of the range. But what I'm saying is if you have enough stocks on your watch list, at least one or two is going to break out outside of the range and you can make some money on it. Right? So that's what I got for you guys today. All right. I hope that helped you out. Always remember, get out of your head and go get into this world because your head is a dangerous place to live. All right. And always remember, the more you study, the less you worry. All right. I'm going to see y'all tonight. Peace.